The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Robert in New Jersey. Hey, Robert, what's going on?
Hey, Tom. A great show.
Thank you so much.
For years. You got a great thing. I've been listening to you for over a decade. That's amazing. You've done a great job.
I appreciate it, man. Appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Believe in the magic of tomorrow, and your spirits will be lifted on the wings of hope. Market-wise, let's take a look at it out here. We have the Dow Industrials down 422, NASDAQ off 122, S&P's down 52, gold contract up $7.20, traded at $1,139 an ounce. Silver up 14 cents at $14.60 an ounce. Platinum down 5 at $1,005 an ounce. You get copper down 4 pennies at $2.29 a pound. Light sweet crude down $3.85 at $45.33 a barrel. Bonds, you have the 10-year up 9 ticks, 127.11. 30-year down up 154.21. King dollar down 394 ticks, trading out at 95.46. The euro is up 83 at 112, and the yen's down a penny and a half at 119.79. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, in the world of the S&Ps, let's take a look at them. What do you have here, folks? Okay, so check it out. If we go take a look at the S&Ps, I'm gonna start with the SPY, because what you're going to see out here is that we are deep, folks, into the August 24th level. What is that setting up? That's going to set up a test of the very low of that level. The low spike out here on the 20. There she goes. On the 24th, that wasn't basically well, it might have been one share traded out there at the 182. Right now, we're at 192.50. That's where we were trading on the 24th, which is the disaster day. The SPYs right now have 174 million shares. You're down on volume, and with that setting up, that's going to set up a test of much lower price. I suspect actually 186 is probably going to be game here. The expansion of volume on the SPY, we get 175 million shares traded. You're deep into the bar. Once you're deep into the bar, by the way, folks, that's saying, hey, guess what? You don't have to, even if I discount the bar from the 24th, which is the 182, what was real for sure is the 186.92. That's what we're going to be going after. The Qs, same setup inside the Qs. What you have with the Qs are trading at 101.59. What game here is 98.01. In fact, the Qs right now, we're at 101.57. The Qs are in a small intraday ABC structure on the way down to 99.76. You know, we'll see whether that hits it at the close. If you go look at the NQs, which is the futures are in an ABC structure down to 4123. Right now, you're trading at 4153. Okay, I'm going to switch gears on you and just go right over to the Nikkei and the Hang Seng. And the reason is this. You know, I do an update every day at 10 o'clock in the morning, folks. You can get that update right on our Facebook page at it's TFNN Corp, TFNN.com on Facebook. The Nikkei, folks, what the Nikkei did last night is this. The Nikkei finished deep into its bars from the 25th. Nikkei went down 724 points. Bottom line, Hang Seng also finished deep into that bar. the way that we're looking right now, we're going to finish at the lows. What that is going to set up is that's going to set up a pretty nasty night over in Asia. The Hang Seng closed down 485 points. We're at 21,182. I expect the Hang Seng is going to take apart the lows that were established on the 24th. The Nikkei probably can at least hit those lows. On the lows in the Nikkei, that'll be down another $400. Well, that could take it apart. It was down 700 last night. So bottom line is that there's some heavy destruction that's going on in this marketplace. It's fast, it's furious, it's all of the above. What we haven't got yet is that you haven't really got any fear going. We'll see if that change is coming into the close, but thus far you just haven't got it. Gold contract, what we have with gold is this. Gold contract right now, we've done 122,000 contracts. You're at 1139. Gold's going to need to build some cause here. The cause that has to be built is this. The August 25th and the August 26th level, we had some real volume coming down in there. So it's having a tough time getting through it. So I suspect you're going to build some more cause. We'll see whether they get the juice to get up into and over that area. That's going to be a tricky area. If we go over and we take a look at the silver market, silver is the culprit out here. When silver came down last week, folks, silver had broken a swing point, broke it with some real volume. Silver's having a hard time holding price. So silver, if you happen to be in the metals market, you're going to have to watch this like a hawk, man, because the divergence is out there, meaning it looks like silver is having a hard time holding price at all. Gold looks good, but it's like, is silver going to drag that gold price down with it? Bonds, what do we have with the bond market? Bond market continues to build cause for higher price. The 10-year right now, 1.1 million contracts. You have the expansion of volume today. You have the price move. Bottom line, I suspect you're going to build some more cause to get up this 128 to 129.10 area, which was the last high that was generated in the 10-year. We take a look at the 30-year, same type of setup. 30-year today, 29,200 USD. 30-year today had 247,000 contracts. 30 has to get a little bit higher. 30, we're at 154.24. I really want the 30 has to get back inside the 156.05 area to get inside that larger range. King Dollar. What do we have with King Dollar? We go over and take a look at King Dollar. This is what you have with King Dollar. King Dollar, no doubt, is having a hard time with price as it tries to get up and over the swing point that was established out here on the 19th of August. That being said, you're backing down with some volume today, but bottom line is that it's holding pretty good. We've done 51,000 contracts. Now, that's an expansion, no doubt. It was trying to get into the highs with 45,000, back down. King Dollar has to get back inside 94, 96. I suspect we're going to get that, but there's a lot of divergences that are in this market right now that, between the metals market, the bond market, and the dollar, it's a little tricky out there. What's not tricky, folks, is this swing low on the S&P, on the NASDAQ, on the Dow. Those swing lows, they want to go after them. This is Tom O'Brien. This is TFNN. Dow right now is down 407. You get the NASDAQ off 118. S&Ps are down 51. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 421. The Nasdaq's off 123. S&Ps are down 53. And as we do each and every Tuesday at 20 past the first hour, we get our man, Mr. Basil Chapman. Don't forget, folks, Basil's got a great show here every trading day, 11 to 12 Eastern Standard Time. Get right on your cell phone. TFNN.mobi. That gets to the audio. You want to get the Tiger TV, video and audio, just go to TFNN.com with your cell phone. Go to the right-hand side. You'll see a box with devices on it. Hit that box. Our servers will understand what type of device you're on. You can get Tiger TV. And we do broadcast live 10 hours every trading day, and then we restream that 24 hours a day. Basil Chapman, what's going on?
Hi, Tom. How are you?
I'm doing great. You having a good day?
A good day. Thank you.
I'm sure you're watching the U.S. Open.
You know, I'm not watching the U.S. Open.
Hey, all that tennis? You're not watching all that tennis, man?
This market had me all so focused that I
market. You just gotta get your shots on in the market and forget it, man.
Oh well, I've got the shorts on, but you know what? I'll play tennis. I forgot to watch it.
What are we gonna look at?
So I've got the Dow up here, and what's really important, and what I've been talking about in my daily show, and for my subscribers, is that the candle. We waited to see how the candle would form for August in the monthly charts. And there's a technique that I developed a long time ago. It's a particular candle pattern that I call the Chapman Wave Roman candle. The reason why I call it a Roman candle, if you see this candle at a top of a market, and that could be in a short term or whether it's, it doesn't matter the time frame. In this case, we're looking at the monthly chart. And let me just open this up a little bit, and you'll see something very interesting. Back in that was in November of 2007, there was the same candle. It was much smaller at that time, but it was the same thing where the market opens at a certain point and immediately drops very sharply and then comes back about halfway. And you can see that this particular candle that we're looking at now, this is the August candle closing yesterday, end of August, has that same look. It's a very large candle in this case, and the wick is about as long or even a little bit longer than the body. And it's a red candle. And when it occurs close to a top, especially as it did back in 2007, it's after a little doji candle. That doji candle says, be careful, because if the next day, and that was this candle right here of July, says if the chart itself opens and then closes and you haven't taken out the top of that candle, in this case, this little doji candle here, that's not a good sign. That's a bad sign. And it also suggests that this particular candle, the Roman candle, which, as you know, candles you light and they blow up, this is that kind of candle. And what it also says is if in the trading of that candle, and this could be a weekly or a daily, doesn't matter, if in a shorter time frame you start to trade a halfway into the wick of that candle, you have to be really careful, because as you take out that halfway marker, you could very quickly go down to the bottom of the candle, maybe even take it out. So this is a really critical period. And I thought at the open yesterday that there was a chance that because we are looking at the shorter term, the 120-minute, and even the daily chart, let me just quickly get to that, holding very well, and that was before this red candle right here. This is the left side chart. There was a little doji candle, and yesterday wasn't a bad day at all, that there could be a little further rally to make that arch pattern and go a little higher. But the moment you got China and all the other overseas markets opening so poorly last night and then carrying through this morning, there was no chance that we would have a very strong rally to take out the high. So what we're looking at here is that thin little wick of last week that went down to 15,370, and that's the same thing in the monthly chart. This is a very critical time. So what we did, you remember, we were in the SOXS, which is the 300% short the semiconductor index. So we took about 100% profit in the remaining position last week, and we quickly this morning jumped back in at 40 into the short side, and there's the SMHs. Not such a bad chart yet, but the fact that it's gone under the 9-period moving average says really be very careful here, and it's the same thing in almost all the indexes. And you can see that the SOXS has jumped very nicely. We got in at 62 and it's at 64.82. So this is a period where yes, you've got overseas markets acting very poorly, but actually the internals of ours, you remember we were looking at the rotation, we are still short the IBB from way up near the top, because I think that the sectors that we're looking at, the XLV, the healthcare, I think slowly one by one they're starting to deteriorate. And here you can see the bonds. This is the 30-year yield, made a peak at 32.55. That's 3.25%, and has pulled back very sharply. And I'll just move this away, and you will see that the Philadelphia housing sector weekly chart has made a peak D and is coming back down very sharply. If, in fact, this is one of the very good sectors recently. If it starts to take out a low of 218, it's at 227 right now, that will have taken out that low of in May, and that'll be very negative. And this is this goes well with that sector. This is wood, which is the iShares, the global timber and forestry ETF. You can see how sharply it's pulled back. This is a market you have to be really careful. If you're long, you have to have very tight stops, and you just have to be prepared that, you know, if the general market is starting to pull back very sharply and the best of the best sectors are starting to deteriorate, then you have to be very careful.
And folks, you can come over to our website at TFNN. You go under newsletters, trading newsletters. You can test drive Basil's newsletter right here, right now, the opening call. And of course, don't forget, every trading day, 11 to 12 Eastern Standard Time, you can call in, talk with them right on your cell phone. You can listen TFNN.mobi. That gets you the audio. If you'd like to get the video, just go to TFNN.com. On the right-hand side, you're going to see a little device, a little box, rather, with devices in it. You can hit that device. You'll get the audio, plus you'll get the video. Basil, you have a great night, safe night. We look forward to the show tomorrow.
Thank you very much, Tom.
Okay, man. Have a great one. So as we're coming into this market closeout here, folks, let's take a look at this, baby. So we have indice volume we're dealing with. Let's see. What do we got? We got we're only 25. In the NYSE, you're at 700 million. That'll come in at about $1 billion. That's short volume, by the way. On the NASDAQ, different animal. NASDAQ, you're going to come in with about $2.4 billion. NASDAQ has some destruction that's happening inside that baby. Some of the Dow stocks, well, yeah, inside the Dow will give you the strength versus the weakness. This is what you have happening. All the Dow, excuse me, folks, all the Dow stocks are in the negative. The laggards leading on the way down is ExxonMobil. It's down $3. JP Morgan's off $2.49. Apple's down $4. GE is down 88 cents. The strongest stock inside the Dow Industrials, it's still down, is Walmart. That's down 77. Coke is down 56. You get Big Mac, McDonald's down $1.40, and Disney's down 169. Inside the NDX 100, this is what you have happening. Inside the NDX 100, out of the 100 stocks, you have 3 that are in the positive. You have American Airlines up 35 cents. You have Liberty Ventures up 27 cents, and Dish Networks is up 10 cents. The laggard on the way down, you have Dollar Tree down 10%. That's trading out at $6.65, down $6.65 at $69. Netflix is off $10 at $104. You get Liberty off $201, and then you get Wynn down $4. Wynn's a monster ABC structure on the way down. The gambling business, folks, was down 30. The GDP in Macau, China, was down 35%. Monster numbers. You stay right there, folks. We'll come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 468. Nasdaq's down 137. S&Ps are down 59. And, these intraday folks, when I started the program, they had already broken their swings with volume. Their ABC structures on the way down, they had already basically at 259 or 258, right before I get on, they had broke their swing with volume. That's where I got that 4123 and 9976 inside the Qs. So bottom line is I expect what you're going to see here as we get closer to the close, you're going to just see an accelerated amount of selling. We go over and we take a look at the So the higher volume stocks out here. This is the higher volume stocks out here today. You get Bank of America down 76 cents. Apple's up 4.39. Netflix, a big one. That's down 10.38. Cisco's down 70 cents. You get Wells Fargo down 2.30. Exxon's down 3.20. Let's go take a look at WFC first. Wells Fargo. So we take a look at Wells Fargo, wrap our head around these financials for a bit. So look at this. Ooh, baby. Yeah. You get some destruction out here. So Wells Fargo had come off its high. The high that we're talking about that come off is $58.70. Here's $51. You get an expansion of volume. And what Wells Fargo is showing us, just as IBM is showing us, is that you're into the 24th bar, and you're into its serious business, too. The high of that bar, folks, is 53. The low is 47. Right now, you're dealing with 51. You know, so what does that set up? That sets up you're going to go test $50. I suspect more than likely we're going to go probably test somewhere around the, yeah. Man, the game is on here for that $47 actually inside Wells Fargo. Big Blue, IBM. IBM is basically has shown us colors in spades. IBM is down 520. They're at 142.62. The 24th on IBM, the low, folks, was 142.32. We're at 142.62. What does that set up? That sets up you're going to go down and test the following day's low on the 25th, which was 140.62. We'll see whether we get the juice when we're down at that level. It's certainly saying that price-wise, it not only wants to be into it, we'll see whether it's going to break down into it. We go take a look at the Goldman Sachs. What do we have with Goldman Sachs out here? Goldman Sachs right now is trading at a price point of 181. It's down $6. And what happens is this, is that the financials, for some reason, always seem to break down last. But when they break, man, they break like big time. And that's what's happening out here. You get the top of the bar in the financials, no, in Goldman Sachs is 186. We're at 181. That sets up, you're going to go test 177.77. You know, we're down $6 today. 177 is only down another $5. That's not the end of the world. Bottom line, folks, is that this is a tough week to do this. Why? Because what happens is that you're going into the holiday week. You have 2 days that are down. You got the Hang Seng that closed at its lows. You got the Nikkei that closed at its lows. We're going to close at our lows. What is that going to set up? That's going to set up Australia gapping lower, Nikkei gapping lower, Hang Seng gapping lower, brings it right around the globe, coming into Europe. Bottom line, you're into a Wednesday. Guess what? Who's going to step in the middle of this train going downtown? Gold contract. What do we have with gold? Gold needs more price spread. The thing that's intriguing inside the gold contract right now, it's not so much intriguing, actually. It's a little worrisome. And what's worrisome about it is this. Gold, I like how gold is acting. What I don't like is how silver's acting. And what I don't particularly like, if you look at SLW, if you're in this metals market, SLW, folks, broke a swing point last week with volume, and that's not good. And it's a confirmed ABC structure on the way down. So what that means, if you're a gold and silver bull, is that that's got to get inside and fail the ABC structure on the way down. Now, you certainly can do that, but that's a heads up inside this whole structure. And where my head's going with that is that, number one, I think that gold can pull it out, but because these S&Ps want to go so low so fast, we're familiar with this before. And the bottom line is that when you get a market and you get a liquidity event, everything can get thrown out the window here. We go take a look at 3M. One second. 3M, we'll pull 3M up. The large caps, folks, are just really getting, I mean, they got some big destruction that's going on. What they're also doing, though, which is pretty cool, is that they're giving us more information about how they want to attack this low. And guess what? they want to basically blow this low out. That's how it's looking right now. 3M is trading at 138, down $3.70. You're way too far into the bar. The top of this bar is 142. The bottom is 134. You're going after 134, man. That's where this thing's going. So that is going to continue to put more pressure on the markets, and I don't expect that thing to lay up. United Technologies, what do you have with UTX? Same type of setup in UTX. What do you have with UTX? UTX is almost at the lows of the bar of the 25th and 26th. 24th and 25th. United Technologies is trading 181, down 181. The low is 87.17. We're at 89.77. I suspect, tomorrow morning it can basically jump the creek. And what jumping the creek is, folks, is that you build some strength coming down to these lower levels. You can do it at lows or at highs. It doesn't matter. In this particular case, you're talking about pushing down into the lows. You jump the creek. Basically, you're just jumping over price. And as you jump over price, you have an expansion of volume. We'll see if that's how this baby is going to be shaken out. But that's what it looks like at this particular point. We go take a look at inside the NQs, what you have as we come into this close here. And the NQs, folks, are NASDAQ futures. NASDAQ futures, first we'll look at a 10-minute. So right now we're at the lows, NQU5. We're at the, 4142 area. The bar of the low is 4196. So thus far, what we have is this: you're $50, $60. Yeah, you're $60 into that bar. When you're $60 into that bar, folks, bottom line, you can go lower. The bottom of that bar is 39.08. Now, 39.08, folks, okay, is a long way down. Can we get there in a couple days? A couple days, we definitely can get there. We've just gone from 12 trading hours. We've gone down. What's that? We've gone down $200. So the bottom line is that it can certainly get down to that level, and we'll see if this is an ABC structure on the way down. It very well could be a very large ABC structure on the way down, and that is a monster heads up, folks. This is Tom O'Brien. This is TFNN. Dow right now is down 487. You get the NASDAQ off 144. S&Ps are down 62 S&P points. That is crazy, folks. Big numbers. You know what, folks? Yesterday's gone. Tomorrow's not here. You only have what you have. Get a stop in. That's the bottom line. Get a stop in if you're long this market. We'll come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now down 505. You get the NASDAQ off 150. S&Ps are down 64. And, you know, there's a couple certain things that you look for. Hey, listen, I think we're going a lot lower, but when you're trading, folks, you always got to be aware of where do you think this thing can bounce out. Now, I don't think we're bouncing, but what I do want to bring up is that, so there's a couple of different things you look at when you're getting into extensions, whether extensions on the way up or the way down. One of them is a tick index. And so what happens with a tick, folks, is this, is that you get minus ticks that are pushing 1450, 1475, okay? We have not got that. We've only got a minus 1270. So what that says is that the fear in the context of buying or selling, in this case selling, is not in the marketplace. Now, that being said, what has happened is this. The 5-day, or the ARMS right now is running a 5.55. That is a monster number. And what that specifically means is this. That means that everyone owns the same stocks, meaning that Apples of the world, you know, whatever these stocks are that they've had, well, they're dumping them all at the exact same time. Because when a market is even and when all the stocks are getting the same amount of buying or selling, folks, okay, the market's a 1. When you go to extreme highs, that can get down to a, 3.5, 4.0, something like that. And what that's saying is that everyone is buying the same stocks. It's so weird that everyone buys and sells the same deal. But anyway, that's how it goes. When that starts hitting, this hit a 5.55 about a few minutes ago. That's saying that everyone is dumping the exact same stock. Now, at the lows of 2007, that hit a 9.5, okay? Is that going to make a difference today and tomorrow? No, it's not. That gauge, however, will make a difference as we get into the end of the week. With this type of market coming into the close right here, that's going to be not a cool thing. You know, we were talking about the NQs, and we just hit the 4118 number. 4123 was the ABC structure on the way down. It was a intraday ABC structure on the way down. Bottom line, has the juice, got the number, all of the above, and we know that when you finish, let's see, we're at you get 16 minutes. 16 minutes is kind of a problem into the marketplace. This is going to be the classic, deal. Turn the machines off. It hit the ABC structure on the way down. You get a small bounce here. If you get the bounce, and if the bounce is on lighter volume, which I expect, guess what? There's enough time to build another ABC structure on the way down. That's the sad part of this. But bottom line, folks, it's not too late to get stops in. If you're long the market, get stops in, because what has happened is this, is that, when folks were basically calling the last few days, we had been talking about the October 2014 swing point. Well, it not only got to the October 2014 swing point, but we got there with some velocity. What has happened is that the August of 2011 deal basically is on the table here. And that's a big number, so, protect yourself. Some of the Dow stocks out here, you get Big Blue down 536, Boeing's down $3, 315. You get Exxon off 344. Let's go take a look at ExxonMobil. If we go take a look at ExxonMobil, XOM. So, the oil market goes topside, pulls back just as viciously. With Exxon, bottom line, let it test the high is 71.38. We hit 71.51 today. It's going to test the high of the low bar right now, and let it test it before you basically walk into that, because what Exxon did have out here the last couple days, bottom line, it didn't have any juice up at that 75 level. If we go actually take a look at the oil contract, that contract itself, man, that was a trip in itself, okay? CLV. The contract today, folks, okay, 15 minutes before the close in oil went down to $1.45. Okay, it was a trip. I wasn't trading it, but I was watching it, man. So oil's down $4.15. Yesterday you had a price point of $49. You're at $45 right now. And hey, listen, if oil can pull back to $40.47 and get in there with light volume, you get action. Because what we've done, today the pullback is with too much volume. That's, you pull back with 647,000. You're going into 666,000. So a pullback to $40.47 and a contraction of volume simultaneously. What I would do with that is this: I would look at that level, then I would look at the XLE, see if the XLE is lining up, see if Exxon is lining up, see if Chevron is lining up. If you get all those lining up, then guess what? You might have, you would have action. That's the bottom line. We go over and we take a look at Apple. What we have at Apple is this. Apple's down with volume. It's trading 66 million shares. It had bounced with 53 million. You're into 108.14, 108.80. As soon as you're into 108.80, that's a problem. Now, with Apple, between 16 and 80, that's not a big deal, meaning that's not into the bar deeply. Many of the other large caps are much deeper into the bar with volume, okay? So when you're bisecting and dissecting your equities, what you want to be looking at is this. You want to be looking at the bars from the 24th and 25th. If your equities are deep into those bars, they're going to go to the bottom of those bars. That's just kind of how it's set up. This is you have a setup that you have the price, you have the volume, you have a high volume spike, you have a week that you can run the stocks, and in this particular case, they're going to be run downtown. So it's all set in place right now. The indices, the NYSE, it's still light volume on NYSE. We'll see what they come in at the close. Right now, you're still only at 816 million. NASDAQ, though, is a different ballgame. NASDAQ is already banging out 1.87 billion. That's already more than yesterday. That is saying that the NASDAQ's going to bang out about 2.4 billion shares. There's going to be big numbers on the NASDAQ. What has happened today is this. If you want to take a look at the E-minis, folks, every day it's a little bit different as to what indice is giving the best signals. E-minis, no doubt, today gave the best signals. In fact, someone just whacked these things big time. They got them down to 1898. Huge volume. So now what you're dealing with is that now you have a high volume spike at 1898. But all day long, these were basically generating some decent signals that we were going to be at lower price. And it seems like it almost swaps off E-minis versus the NQs. And, I have no clue why that happens. But what you want to do is that you want to grasp whatever you can, whatever type of information you can out of the marketplace as it's either going up and or going down. And let me pull this back a bit. Yeah, see, this is problematic. So check this out. The futures, folks, are at 1910. And the low of the 25th is 1860. That's easy to get tested. That's not a big deal. where the high is 1948. You know, bottom line, you're deep into that level. Dow Industrials right now are down 460. You get the Nasdaq off 135. S&Ps are down 58. You stay right there, folks. We come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 474, Nasdaq's 161, S&Ps are down 60. And if we take a look at the SPYs, the Qs, the SPYs are coming in with 223 million shares. That's monster volume, folks. We did the counter trend bounces, 160 million, and well, actually, the 27th was pretty good, 274 million. Then we made a high with 160. You can back off that with 224. The NDX 100, the Qs, what you did with the Qs were coming down with, you got 64 million shares. We had hit that high up there with 49 million. Yesterday, you did 39 million. The bottom line, with all these indices, what you have is this, is that you're into that bar, you're going into a Wednesday in really a vacation week, okay? So that is a heads up extraordinaire, big time too. You take a look at the large caps are basically screaming that they're going to go after the lows. In fact, as we, it's even coming into the close out here, the low for IBM is 140.62. We've hit 141.85. And it's hitting that, by the way, with volume. Last time we were down, there was 7 million. It was done 4.5 right now. Guess what? that thing is game to basically rip that baby apart. And IBM wants a lot lower price. IBM has absolutely blown its brains out on buying stock all the way down from 210. So they basically have taken all the shareholders' money, bought it all the way down, and you talk about double downing on the way down. Oh my God, they got it and they have it in spades. We go over and we take a look at there she is. Walmart, because Walmart is one of the first ones that gave us a heads up that trouble in paradise was coming. Walmart right now has an expansion of volume. You're down 88 cents. You're at $63.87. And you're deep into the bar. The low, folks, of the 24th, which is the downdraft, in Walmart is 61.50. Now, we're going to go after that level. The high is 66.16. The low is 61. You're at 63.87. Guess what? You're right in the middle of that deal. When you're in the middle of the deal, yeah, you can make the case that we can go to the highs. Bottom line, we can go to the lows just as easy. Sad but true. Chevron. We go take a look at Chevron. What do we have at Chevron? CVX. Chevron out here. Chevron is trading at 78.21. You're down 280. If you're looking to buy these, now Chevron's a decent setup too. Let this baby pull back to 75.02 and prove itself. Because what these equities have to do, particularly the oil equities, is that they've been on a one-way move. Chevron went from $112 in January 29th down to 69. You come off the lows with decent strength, but you didn't break a swing point. When you don't break a swing point with volume, folks, that's not where the market's talking, walking, and squawking. Wait for a pullback there. See what develops as that baby does pull back. And what you're looking for specifically is you're looking for the pullback with lighter volume. You've already had a sign of strength. You pull back with lighter volume. What that does, I would set that up also with the oil market, but what that does do is that gives you a parameter that where you can buy it, where you can put your stop, and what you're looking for, meaning as you're going topside. We go take a look at the XLF, because the financials, folks, did break. And the financials always break last. The financials, the XLF's down 72 cents. You have 58 million shares. That's an expansion of volume. You're at 23.42 is the high. Yeah, you're $1.10 into that bar. That's saying that tomorrow we have game to 22.25. That would be the low that was established on the 25th. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials down to 423. NASDAQ off 127. S&Ps are off 53. We're going to be right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. How are you?
I'm doing great. You having a good day out there?
I am having a great day. Thank you very much. I want to preface by saying that I'm so grateful to you and TFNN for you to assemble such a great people, such a team to help the small investors like myself.
Well, we appreciate you growling and prowling out here with us, Sam. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great night, folks. I start with the idea that nothing is impossible and everything can be done in the end. Market-wise, let's take a look at it out here. We had the Dow finish down 469, NASDAQ off $140, S&P's down 51, gold contract up $7, traded $1,139 an ounce. Silver up 9 cents at $14.59 an ounce. Platinum down 8 at 1,001 an ounce. Copper down 4.5 pennies at $2.29 a pound. Light sweet crude down $4.02 at $45.18 a barrel. Oil's a trip, folks. It's just amazing that when you think we use so much oil and it can go up and down $4, $5, $6 at a price. It's just amazing. Bonds, 10-year up 11 ticks, 127.13. 30 up 13 ticks, 155.01. They're both building cars, trucks to get into higher price. They got into higher price today. It looks like they're going to go after those highs. King dollar couldn't hold a higher price, down 424, 95.43. You did have an expansion of volume on the way down, subtle, but you had that expansion. Euro up 88 at 112.99. The yen was down a penny and a half at 119.77. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, in the world of the S&Ps, let's take a look at them. It's a problem child out here, folks, and it's a very large problem child for a couple different reasons. The first reason has to do with where we closed. We closed at down $5.75. You closed at $91.92. Now, the high of the downdraft, the disaster that happened on the 24th of August, the high was 197. Well, we're at 191.92. Now, the low of that area, folks, okay, is 182. However, that being said, you know, if you happen to be in front of a screen that day, there was a tick that went off at that level, and maybe a couple shares did go off at that level, but the bottom line is that I'm not even using that level as the low. The reason being is that the ETF structures themselves had a disconnect in the marketplace, okay? And that level there, to me, is not real. So the level that I'm using is 186.88. And the reason I'm using that level, when I was in front of the screen, that's what was really trading, okay? When it opened, it was there for a flash, and that's it. So what does that mean? Well, what it means is this. We're at the low of that day was 186.88. We're at 191. You're going to go after that low. That's the way how it's set up right now. The low of the following day, which we know that it did trade out there at 1550 hours, was 186.92. I expect, guess what? We're going to see that low get tested tomorrow. The Qs. What do we have with the Qs? Same type of setup inside the Qs, the NDX 100. The NDX 100 closed out today, and they both had expansions of volume, by the way. So the Qs closed out today, had 69 million shares traded, down $3, 101.23. The high of the low inside the Qs is 102.53. Now, the number you can use on the Qs, just take the following day. The following day, it was 98.01. 98.01 is going to get tested tomorrow because the Qs did the same thing. The Qs, when I looked up, claimed that they were down $14. It was like, I think it was 84. Let me get the exact number because it was like, man, that one thing wasn't trading at that point. I trade the NASDAQ futures all the time, folks. And yeah, well, it said it was, it says 98. No, not 98. One second. I think it's 84, man. Yeah, it was 84. Okay, so if we pull this up, it was 84. And the NQs themselves traded down there, okay? But they didn't know where to open the Qs. That's what it come down to, folks. Yeah, it was 84.74. The number you want to take a look at is going to be the 98.05. Now, you break that 98.05, well, guess what? You break everything. That's going to be going downtown. Gold contract. What do we have with gold? We need some price spread on gold. We need some heavier volume on gold. What we've had is this. The divergence that we have is this. And this is always dangerous when you get a market that's coming down and coming down pretty heavily. The gold contract wants higher price. I like basically what gold has done. I'd like to see the volume heavier. Silver, to me, is a big problem. What gold is doing and silver is doing, well, what gold is doing first off is this. It's going into the downdraft of the 25th and the 26th. It has lighter volume than that downdraft. It has heavier volume than on the way down. So what that says is this, is that it's taken up the supply line. It's going to take more to get that supply line out of the way. And the supply line I'm talking about, folks, is from the downdraft, but it's also from you can take your choice. Gold, you can take the choice of the last 6 months. Gold was up there at 12.16. That's all the supply line up there. So we need some price spread. And silver, folks, is the culprit. Okay, if we go take a look at the silver market, what you're going to see is this. They took silver south, and they took it south in a big way last week. Silver Wheaton broke a swing point with volume, which is concerning because silver Wheaton basically is a parameter as to where silver wants to go itself. Silver's trading at 14.59. 14.52 is the number. You want to see silver stay inside that 14.52 level. Now, switch gears on you for a second, because this is the market information, when we do this update every day as to give an inclination as to where things are going. This is where the problem lies. The problem lies, folks, in how we closed, and the problem lies in Hang Seng and Hong Kong and the Nikkei 225 in Japan. And this is what it is. Last night, Hong Kong closed down $485. You closed at 21,185. Well, the low, folks, is 21,136. Hong Kong is going to go after its low tonight. It looks to me like it's going to blow it away. It's going to be real easy to blow it away, actually. Hong Kong was down 485 last night. It only has to come down 165, 315, and it's blowing away its low. Nikkei 225. What do you have with the Nikkei 225? Same type of setup. Nikkei came down $724 last night, 18,165. The low inside the Nikkei is 17,714. So we got what? That's 285, 385, 445. 445, the Nikkei blows it away. What does that set up? Bottom line is that sets up some rough markets in the morning, coming into a vacation, all the above. Bottom line, this market wants to come down and go after those lows. This is Tom O'Brien. This is TFNN. Dow finished down 469. NASDAQ down $140. S&P's off 53. You stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish down 469, Nasdaq off $140, S&P's down 53.5. And as we do each and every Tuesday at 20 past the second hour, we have our man, Mr. Andy Heck. And don't forget, folks, at TFNN, we do 10 hours of live programming every trading day. You can get it right on your cell phone, tfnn.mobi. You want to get Tiger TV, go to TFNN.com, hit the box on the right-hand side where the devices are. You can get the audio and the video. And, of course, our man, Mr. Andy Heck, has an outstanding show every Tuesday and Thursday, 5 to 6 Eastern Standard Time. Also has a great newsletter. It's the Technomento Commodity Report. You can get that 1 month, absolutely free. The way you do it, you go to TFNN. You'll see at the very top, newsletters. Go to newsletters, go to trading newsletters. You hit that Technomento Commodity Report, get it 30 days, absolutely free. And we talk commodities, of course. Commodities trade in the futures markets, but guess what, folks? They have all ETFs, ETNs that trade just like the futures markets. Andy Heck, what's going on?
Hey, Tom, how are you?
I'm doing great, man. You having a good day out there?
I'm doing good. Crazy markets, huh? A little bit of volatility.
Yeah, volatility in spades, man.
Hey, I've been listening to you. I totally agree with what you're saying about the stock market. I mean, I think that thing is looking really ugly.
Yeah, it's really, you know what, folks, you got a lot of different things happening, but one of the biggest things, I think, even at the beginning of the day, having that now, the Hang Seng and the Nikkei finish at lows was dire coming into this day, folks. Never mind how we finished. And, you know, you can't even talk China anymore because actually one of the tigers in the den brought it up is that what are they going to start hanging, you know, people in China now if they say something bad about the stock market? Because it's that bizarre, folks, okay? It
is. You know what I was thinking before? I was like thinking of, I have to think of my titles, you know, and stuff to write about this weekend, which I always do.
Yeah.
I put my latest articles in there. And I was thinking about how the market is hanging on news out of China. And it's like, every hour it wants another. It's kind of like you ever go eat Chinese food and like you're hungry an hour or two later.
Oh my God!
It's kind of like
that's a good one. No, that's a good one, man. And you know it's so crazy. What's so crazy? That's a good one, though. That's a good one.
I thought you'd like that one.
That's sick.
I'll write an article about that.
That's it. No, listen. You know, I've found that I think that if you can, whether it's writing or talking, if you can make the most amount of common sense that you can understand, and that you can understand that. What I can't, what I can't quite understand is that it's pretty wild to me, folks, is that folks keep blaming China. Guess what? China went up like 150%. You know, our markets basically have been up for 6 years, folks, and the last 3 years are no volume. I mean, this is just distribution in spades.
Right. Forget our markets for a minute. What China's really killing here is commodities.
Yeah.
And what they're really killing is Australia and Canada and Brazil and countries that produce commodities. Look at that Aussie dollar, man. That thing's going to go through 70.
Yep. No, it's serious business. I mean, it's serious.
Look at copper. Copper, you know, last week got down to 220 and a quarter. Hey, it exploded up along with oil and everything else. Now we're back below 230.
Yeah.
Oil's a different world.
Well,
listen,
oil's a trip. I know, man.
Oil's a trip. I mean, you know, in 1 week's time, we rallied 30%. All right. So let's talk about oil for a minute.
Okay.
A while ago, I wrote for for seeking alpha. I'll put an oil chart up.
Okay.
That oil wouldn't trade much below 40, but we got down to 37.75, and we proceeded to turn around and explode up because the market remembered, hey, there's a political premium here, and Iran and Saudi Arabia are fighting each other in Yemen, and there's that long border and all those logistical things, and hey, don't crush this thing down to 20 too fast because this is a crazy market. And yeah, there's lots of supply today, but 50 million barrels. You got 50 million barrels coming out, more than that, coming out of OPEC, the U.S., and Russia. And something happens in the middle, and really the swing amount is probably 1 to 3 million barrels. So it's a very delicate equation here in terms of supply and demand. So while, hey, the market's oversupplied now and inventories are building, this delicate equation, given some real problems where, more than 50% of the world's reserves lie, this is the most turbulent region of the world. And that's kind of why that kind of caught up with the market. So they took a 30% high. Of course, we're coming lower again today. I mean, that makes sense. They wanted to take it back. $50 was the perfect target. I think they got it within 60 cents or so, or 65 cents of the $50 mark. It's going
to be cool to see, if it can retrace into that 41, man. If it retraces into 41 with light volume, man, I think I'm going to be all over it. I mean, I kind of like that deal. Thus far, I haven't been trading it. Were you watching it at the close? What happened, folks, at the close of oil in the pit trading today? It was crazy. It was down $1.45 in 15 minutes. It was like, oh my God.
Oh, it's like watching one of those slot machines,
It is.
The ticks on that thing. It's really a crazy market, and the other commodity markets are kind of they're following to some extent, but oil has kind of divorced itself, and I expect big volatility, big daily ranges in oil now, and I think that this is kind of a trader's paradise, but you got to be very careful there. You never know, what's coming down the pike there. Let's turn and let's talk about precious metals, because I heard a little doubt in your voice today, so I wanted to kind of examine that with you.
Well, my problem is that the silver contract, when that broke last week, okay?
That was ugly.
So what you had is this, okay? So we broke downtown, folks, and when silver broke downtown, silver went from, let me get the Z contract up here.
It went to 13.95, right?
Yeah, so...
And it was on option expiration day.
Yeah, I know. But, it broke. That's,
Right.
What I do is kind of black and white, you know what I mean? It's like, it is what it is. So where my problem lies has to do with silver wheaton. And what happened, folks, is this. So I know the stock really well, folks. And silver wheaton, what silver wheaton is this. It's just like a Rheingold, not a Rheingold, a Royal Gold or a Franco Nevada. It's a
royalty play.
It's a bank, right? It's a bank for all the silver, companies. Mm-hmm. Well, it broke an ABC structure on the way down with volume. It's like, oh, you gotta be kidding me, man. Okay.
Yeah.
That's saying that it can go to 978. We're at 1183. Okay. So when I look at that correlation, and then I look at where the S&Ps are, Andy, right? If I remember anything that would be tattooed on my forehead is that, people thought gold was safe in 2008. Gold went to 1136 to 666 in a heartbeat because the market was going, because it was a liquidity event.
Right.
So that concerns me. I know,
but to even get more confused, the demand for physical silver, 100-ounce bars in silver are flying out the door.
No,
right
they are.
now.
They are.
So,
in fact, there's no doubt about that.
Right. So it's very confusing. What's been bothering me all along, and the reason I've been on the other side of the fence from you with gold, is that these divergences between platinum and gold, silver and gold. I even looked at grains in gold, this weekend. I wrote a piece about that. I put in the corn gold ratio, I looked at gold. I said to myself, gold is a currency. Okay, let's look at gold as a currency and what's the purchasing power of gold. Gold is so strong relative to everything that, in a deflationary spiral, if we're going that way because of China, I'm afraid they're going to go after gold too.
Well, When we come back, we're going to talk about that.
Okay.
Andy Heck, Tom O'Brien, all you tigers and tigresses, we appreciate you being out here growling and prowling with us. Andy and I coming right back. We want to hear from you. Our phone number is 877-927-6648. Stay there, folks. We're coming right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow finished down 469. Nasdaq off a $140. S&P's down 53. We're talking with our man, Mr. Andy Heck. And, of course, don't forget, folks, coming up 5 to 6 right here at TFNN. Andy's got a great show every Tuesday, Thursday. If you happen to be listening in your car right now on an AM radio station, remember that you can get us 24 hours a day right on your cell phone, tfnn.mobi. Plug it right into that Bluetooth system that you have. So, Andy, so check this out, okay? You know, we've both been in the, well, you've been in the commodity market a lot longer than I have. I've been heavily involved in the gold market for quite a while. But when I first got in the gold market, right, my correlation always was gold was at 282. Mm-hmm. And I'd be, you know, shopping for clothes, right? And I'd say, oh, my God, hold it. A shirt is like $30. And I'm saying to myself, man, that's 12% of the price of gold. Why am I going to buy a shirt? I got to go buy another ounce of gold, right? Uh-huh. And this would flip through my head, folks, always, right? Yeah. Well, check this out. I'm getting some supplies for breakfast on Sunday morning, right? Mm-hmm. And I'm buying, you know, eggs and bacon and all that. And, you know, I like all that stuff and eat it. And then I buy a quart of half and half, right? Mm-hmm. So a quart of half and half, folks, you know, for the coffee, right, is $3.49, right? Mm-hmm. And I'm standing in front of that thing, looking at it, saying $3.49. So I'm saying to myself, okay, man, that means that, you know, if I buy 81 gallons, okay, which is not a big deal, of half and half, that's 1 ounce of gold. Man, I was sitting there saying, guess what? We get inflation happening, okay? Because that makes absolutely zero sense to me that 81 gallons of milk or half and half equal an ounce of gold, you know? So I'm just bringing it up in the context because I like that correlation. Because what happens, folks, is that the inflation, we have inflation here, man, okay? Because it was like, I'm holding this in my hand, I'm saying to myself, you gotta be kidding me, man. What do you want? Do you want 81 gallons of half and half, or do you want an ounce of gold? You know, so.
We have inflation in the prices that we pay at the supermarket. But what I looked at in the article that I wrote, and it's I put it up in the den. It's the one on gold and called Divergences. I looked at, you know, the historical list, 40, 50 years, the price of corn, the price of soybeans, the price of wheat versus gold.
Yeah.
And they're saying that gold is very, very strong on a historical basis, you know, and has huge purchasing power right here against those raw materials, not the finished stuff.
Yep.
Hey, we go to the supermarket, we pay one price. This is why, you know, corporate profits are what they are. Corporations have a right to make a lot of money.
Right.
No question. You know, you turn wheat into a loaf of bread. You know, they're still charging the same price for that loaf of bread that they were when wheat was $13. So we don't feel it directly. You know what I mean? So I'm just saying, this is one of the things, besides I wanted to look outside of just the precious metals to tell me, is gold, you know, really this strong? And there could be a reason that gold's this strong, because no one trusts fiat currency. I mean, that's very possible. No question about it. And eventually, I think that'll happen. But in deflationary environments, the price of everything goes down.
Yeah.
That's what I'm concerned about with gold.
That's a fact. And what you do have is that I think one of the kickers are going to be that, okay, we go through 2007, 2008. And I don't know this, folks, but my general feeling is that because there was such devastation, I think that people have saved a lot more money, that they have a lot more cash. So it's not going to be the same type of devastation for people because, you know, when you go through something like that, hopefully they got a heads up that, you know, they didn't basically put everything on basically green again.
Right. You know, but it's always the same, but it's always different.
It is. Listen, man, what blows my mind more than anything about markets in general is that you can absolutely go back to the 1920s and 1930s and it's no different every time. It's like, oh my God, how does this work?
You know what's really interesting? Just to talk politics for a minute, not to take any side or anything.
Yeah.
But I think it's really interesting that, you know, look, on the Democratic side, there's a clear front runner. On the Republican side, 3 of the top 4 candidates are totally non-politicians. That's telling us something, too, and that's telling us something about markets. You know, psychology is changing a little bit in this country, which is still the economic leader of the world. So maybe you're right. Maybe people did save a little bit more from where we went into that housing crisis and that horrible thing but psychology is changing again here. And our policy in dealing with China, you know, these are big topics of conversation and will be over the next almost year and a half before the election, where we'll elect a new government. It's going to be very, very interesting, but it's going to affect markets. And the biggest thing we wait for now is not China. It's whether the Fed moves and they raise rates even in the face of what's going on in China, because other than inflation, the economic numbers in the U.S. are good and are within their parameters to do a 25 basis point hike. And the market right now does not expect that. So we're going to see a lot of volatility in September this year. That's my prediction. I mean, it's a trader's paradise and it's an investor's nightmare.
Yeah, there's no doubt. And you know, what has happened, folks, you know, you had that huge counter trend bounce. You can just go look at the front page of Barron's, you know, bottom line, the front page of Barron's on Saturday, you know, being a bear, I was happy looking at it, actually, you know, is the stock market is the worst over. It's like, oh my God, okay? You know,
at least they didn't make a declaration. If they said the worst is over, you'd know what was going. A couple of weeks ago, I wrote a piece for Seeking Alpha. I actually took a picture of the cover of Barron's, put it on the top of the piece, and it said "Commodities, time to buy." And oil proceeded to go straight to 37.75. Everything went to hell in a handbasket. So I love the counter-intuitive nature of the Barron's headline.
Oh, there's no doubt, man. Listen, I used to do workshops with Tom Dorsey, and from Dorsey Wright, and I would love how he would do two different things. He'd show all these magazines, folks, and the headlines, and then what he would also do, which is pretty cool for a charting technique, he's into point and figure. What he'd do for a charting technique, folks, he'd have people put a piece of paper over the stock, right, and say, would you buy that? And what he was trying to show is that, these stocks that have great names, whether it's an IBM, that you think would never go down, and people would say, no, I'd never buy that, and then he'd put it up and say, oh my God, I can't believe it's that stock. Do you know what I mean?
Right, I have that in my portfolio, right?
Yeah, and it's really cool because it's just hard to bring points home sometimes,
And as a guy who writes, I write a lot, you know that.
Yeah.
I mean, I write for all of these different sites. I write specifically for, my most number of pieces go to Seeking Alpha. Listen, when you write, and you have to put an article out there, you got to get a catchy title.
Yeah.
So a lot of times, the article, the headline, the big story is what sells the thing. But it's kind of a fallacy. It's kind of a little smoke and mirrors for writers like me. If we write just boring titles, no one's going to read it.
No, they're not. Right.
So that's part of it. I'm guilty of it myself at times.
Oh no, yeah, no. Listen, it is what it is. No,
right. I wrote a piece. I got to tell you, I wrote a piece. Do you ever watch Seinfeld?
I do. Yeah.
Okay.
I haven't in years, but
do you remember there was an episode where he had this guy who trained him. He was 80 years old. His name was Izzy Mandelbaum. So I did an article on natural gas, basically, kind of using that as kind of an analogy. I put it in the den. It's kind of funny. I really enjoyed it. But writing it, I like writing articles that there's a little humor in. But
that's important in this marketplace, man.
But natural gas is something to pay attention to here because we're out of August. Come October, I think the price is going to go higher.
Okay. Well, listen, they're going to be listening to you at 5 o'clock, man.
Absolutely. It's go time. See you later.
Okay, man. Have a great one. Have a safe one. Thanks, Andy. Andy's going to be coming up right after me, folks. We look forward to his show. Dow finished down 469. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We had the Dow finished down 469. NASDAQ was off $1.52. The S&Ps were down 56. Volume, this is what you did out here. You did $1.1 billion on the NYSE. That was an expansion of volume. Inside the NASDAQ, you did 2.2. That also is an expansion of volume. The Qs did volume of 70 million. That was certainly an expansion of volume, big expansion of volume. The SPYs did, let's see what we got here. The SPYs did 249, same setup there. The IWM did 44 million, and the diamonds did 14 million. So they all had an expansion of volume as you were getting to lower price. One of the deviant moves that has not broken down yet. Well, it's broken down, but not like it can break down, is the IBB. The IBB also had an expansion of volume, though. The IBB right now, if we pull this up, I want to show you something of the IBB, because the IBB is crucial for the NASDAQ. The IBB closed down $8.65. You're at 333. And the IBB, you know, this thing was pushing into its lows, and you had some juice as it was pushing into it. Now, the number to keep your eye on real closely with the IBB is right where we're basically at right now, is the 334.50 level. You know, we're 333.30. And this is why. On the 24th, folks, you know, we basically, well, we did get down. One tick is down there at the 315, but that tick, maybe one share, well, maybe 100 shares were traded. The low really is like 315. The high of that day is 340. So we're into that high. The place that it had some support is 328. You break that level inside the IBB, that is going to put some major damage inside the NASDAQ. What we did out here, percentage-wise today, is this. The Dow was down 2.8, the S&Ps were down 2.9, and the NASDAQ was down 2.9. Right from the get-go this morning, inside the S&Ps, you had some major selling. The S&P futures, each and every time it was taking a leg down, it would build some cause, and building cause means you trade back and forth within a range, and as you are basically trying to push higher or lower, you're either going to get higher volume or lower volume. Well, bottom line is that you got dramatically lower volume as we pushed and broke those lower swing points. Now, what does that set up? That sets up, you know, tomorrow morning some problems. What we did have is that we had a minus 1270 and a down tick. We had that coming into the close. That's saying that you did get some fear inside the marketplace. The trend reading was 4.95. Now, that is a large trend reading, folks, okay? That is a very large trend reading. If we had got a few down ticks with a trend reading like that, and we didn't have the Asian markets close it at their lows, you know, you could almost try to make a case that you could get a bounce. I don't see any bounce here, period. The reason I don't see the bounce is that you had the expansion of volume off the low. It was fast. It was furious. It was all of the above. And more than likely, what it actually was, which is kind of cool looking at, is that, you know, these companies have been buying back stock for a long period of time, and they get just toasted and roasted buying back stock. I mean, if you want to, just look at IBM. IBM has been buying back stock since $210. IBM right now is trading at 142.68. IBM's on its way to 116. Bottom line is that it's broken down, broken with volume. First place that has, real support is this 116.80. So it's possible that fast counter trend bounce absolutely had to do with the amount of stock buying from individual companies to basically hold up their stock. Nothing is larger than the marketplace, folks. That's what it comes down to. If you've been following what's happening in China, it's pretty sick, actually. China happens to think that they can control their markets. Let's go look at China for a second so I can just show you. The thing that is like really insane in China is that they're trying to control something. We go look at Shanghai first. We're gonna pull up two different ones. So Shanghai last night, you got to see the whole correlation of how this is shaking out, though. So I'm going to pull this back and put this on a 10-year basis. The last time Shanghai went up, Shanghai moved, folks, in 2006 from 1833 up to 6,100. It moved just as quick back to 1664. So picture. November of 2006, it's the 1800. October of 2007, 1 year, it's at 6,100. October of 2008, it's at 1,600. So a year up, a year down, toasted, roasted, goes down 90%, right? Okay, so now let's figure out where we are. The movement started in July of 2014, 2033. You get up to 51.73, June of 2015. Now we're at 31.66. This wants to go test the 2,500 level. Even at that level, bottom line is that you're still going to be, you'd be flat for the year. For some reason, China thinks they can control that aspect. I don't see it. I particularly don't see it because what China also has is volume off its high, and that's a major problem. If we go over to Hang Seng, now that's just technically, fundamentally, I can get into this with you in a second, because fundamentally, the stocks are still so much overvalued than our own market. It's amazing on a fundamental basis. If we go to the Hang Seng, what you're going to see is the Hang Seng is this. So the Hang Seng, Hong Kong, still China, but Hong Kong. The Hang Seng right now is at 21,185. What this did is pierced the place that it did have some support, which was August of 2013. That high was 22,800. What does that set up? Well, it's a problem because it sets up a 19,000, even an 18,220 level. That's how that's set up right now. And that level also corresponds to the lows that were established in October of 2011. The Nikkei. The Nikkei in Japan last night, that got hit fast, furious. Nikkei has just gone from 21,000 to 18,612 trading days. We put this up and we put this on a monthly. You're going to see that, the Nikkei fast, furious market has had a great run. It went from 8,400 up to 20,000. Well, a normal retracement, folks, is going to take it back to 15,942. And the Nikkei, by the way, okay, is probably still in a bull market, which is just a mind blower. But it has to do with it doesn't matter what it has to do with, but it has to do with the destruction of the price of the yen. But a normal market is a 50% retracement. 50% retracement of that move gets you 14,800. Nikkei has huge volume at that level. When we had taken that out in October of last year, took it out with light volume. So bottom line, folks, if you're long the market, please get your stops in. Don't let this thing get away from you. You stay right there, folks. I'm Mr. Andy Heck's going to be coming up next, growling and prowling with you. And always remember, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need is right inside you. Grab it and have a blast. Bam!
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. And, we do have when we're talking in September 1st right now, the Fed meeting is September 16th and 17th. You are going to have these Federal Reserve presidents out, basically... the Bulls and the Bears giving their views on what's going on. In Boston today, you had Eric Rosengren come out, who's the Fed chairman of Boston. His quotes were, he was saying, uncertainty over inflation and global growth justifies a modest pace of interest rate increases regardless of when the central bank begins tightening. Here's this quote. Given the current and forecast conditions, not only is the pace likely to be gradual, but the federal funds rate in the longer run may be lower than in the previous tightening cycles, he said Tuesday in a speech in New York. We are exposed to international factors, so there is a global slowdown. We won't be perfectly insulated, he told the audience in response to a question after the speech. But I think the U.S. economy is strong enough that the risk of foreign weakness tipping the U.S. into a recession is relatively low, is a relatively low probability event. The Fed has said it will be appropriate to raise rates when it has seen some further improvement in the labor market and is reasonably confident that inflation will move back to a 2% target over the medium term. Recent reports on wages and salaries still show few signs that the tightening labor market are translating into increases in wages and salaries consistent with reaching the 2% inflation rate, he said. On Saturday, you had Stanley Fischer, who's the vice chairman, said there is good reason to believe that inflation will move higher as forces holding down inflation, such as oil and strengthening the U.S. dollar, dissipate. Rosengard said his own outlook on inflation is dependent on whether he believes the economy will continue to expand faster than the longer-term growth potential for growth. That, in turn, is threatened by turmoil in the stock market and falling commodity prices. You know, bottom line, folks, is that I don't see them raising rates September. The main reason is that no matter what the job rate is, no matter what the inflation rate is, we have markets that are this volatile, and they throw that wrench inside this market. They're going to be so much. Everyone, put yourself in their position, sitting at a table, and you have the market in the last 3 days. No, in the last week. Mr. Larry Pesavento was bringing it up this morning on the 9 o'clock in the morning show. The Dow Industrials has moved 10,000 points. Now, we've moved another 469 points today. So you move 10,000 points. You have a indice that is at 16,000 points, okay? Now, picture that you're a regulator. Would you, in your right mind, turn around and mess with anything when you're talking only 13 days away? I don't think so. And I think what we'll probably have is this. This is going to be a tough week. That's the bottom line. You see, this is a tough week going right into Labor Day. It's like, who's going to step in front of that steam train? I don't see it. What I do see is that over the weekend, you get a long weekend. You know, as I said, forever. Markets don't go down forever, don't go up forever. You'll get another bounce. It'll be a good bounce. And I suspect what that bounce will be all about, more than likely, will be somewhere over the weekend maybe. And we'll need a few more down ticks. We'll need the 5-day arms to go up even higher. We'll need some more destruction on the way down. We'll need, you know, all of the above. But then you'll probably get the Fed coming out basically saying, hey, guess what? We're not going up. We're not going up in September, okay? You know, you'll get something like that come out of it. If I remember, one of the wildest days inside the marketplace, folks, was in 1998. And when Reuben was the Treasury Secretary, Alan Greenspan was the head of the Fed, they come out at 315 and dropped the rates by 2 points. Now, always remember, whatever you think about, you bring about. Whatever you focus on grows. Have a great night, folks. Have a safe night. You stay right there. Our man, Mr. Andy Hex, coming up next to be growling and prowling with you. Go get him, folks.